The gavel slammed on the table, shattering the silence of the Federal Reserve's secret meeting. A $50 million investment had vanished, and Sarah Chen's 18% valuation drop threatened TechVest's survival. But the real betrayal wasn't in the numbers. It was in the hidden clauses buried in the blockchain contract. Marcus Langford's calm mask cracked as he read the clause. A 90% stake transfer to an unknown entity. Sarah's trembling hands hovered over the report, realizing the Fed's shadow had already claimed their company. Not a pause, not a breath, a void. The clock on the wall ticked, tick, tick, tick. As Chen's eyes darted to the board members, their faces masks of indifference. Her cortisol spiked, her mind racing through every possible excuse, every lie, every desperate attempt to salvage her reputation. Langford's silence was a weapon, honed by years of studying human behavior. He'd read Cialdini's influence in the margins of his MBA thesis, had memorized the power of a vacuum. Chen's throat tightened. She spoke first. I didn't realize the market would crash so fast. The words hung in the air, a confession she hadn't meant to give. Langford nodded, as if she'd just solved a puzzle. The meeting was recorded. The audio later leaked to a rival firm during a hostile takeover. By the end of the year, Chen's $12 million equity was gone, her name smeared across industry blogs as a traitor. The Fed's hands, unseen, had tightened their grip on the levers of power. The human brain, in moments of uncertainty, craves resolution like a parched desert. Strategic silence exploits this primal need, weaponizing the void between words to force the co-founder into a psychological corner. When Langford's voice fell silent, the room became a vacuum, no air, no escape. Chen's amygdala, the brain's ancient survival center, fired in overdrive, flooding her system with adrenaline. Her rational mind, the prefrontal cortex, was overridden by instinct. Say something, anything. She didn't realize she was confessing to a crime she hadn't committed. The silence wasn't just a tactic, it was a neurological trap. Cialdini's influence details how power vacuums compel people to act, even when it's against their best interest. In the 2019 Harvard experiment, subjects placed in silence after being accused of unethical behavior confessed to 78% of minor transgressions within 10 minutes. The study's lead researcher, Dr. Elena Marquez, noted that the absence of a response triggers a cognitive dissonance that compels the subject to self-justify. This is the same mechanism Langford weaponized. Consider Walmart's 2016 union negotiations. When labor representatives demanded higher wages, the CEO let a 45-second silence stretch after each refusal. Union leaders, desperate to fill the void, conceded 20% of their demands without direct confrontation. The silence wasn't just a pause, it was a calculated manipulation of the human need for closure. In Chen's case, the silence wasn't just psychological, it was physical. The boardroom's gilded clock ticked louder, each second a hammer blow. Her eyes darted to the windowless ceiling, a prison of marble and ambition. She didn't realize she was being recorded, her confession etched into a corporate ledger. By the time she spoke, it was too late. The silence had already won. Step 1. The CEO sets the scene with a hostile audit report, isolating the co-founder. Langford's team had spent weeks weaponizing data, cherry-picking metrics that painted Chen as the sole architect of the $50 million loss. The boardroom's marble walls reflected the audit's damning red ink, a visual cue that this was no ordinary meeting. Chen's chair was positioned at a 45-degree angle from the CEO's, a subtle but calculated move to make her feel physically disoriented. Like a pawn in a chess game she didn't understand. Step 2. The CEO delivers a neutral statement. I need your explanation. Then, silence. Langford's voice was modulated, robotic, no inflection, no emotion. The board members, trained in corporate warfare, had rehearsed this moment. Their eyes remained fixed on their laptops, screens blank, as if they were not present. The silence wasn't just psychological, it was physical. The air in the room thickened, each second stretching like taffy. Chen's breath quickened. She glanced at her legal team, but they were instructed to remain silent. Another layer of asymmetric information. Step 3. The co-founder's brain floods with cortisol, triggering a fight-or-flight response. Her amygdala, the primal part of her brain, overrode her rational thinking. She didn't realize she was confessing to errors she hadn't previously acknowledged. Her voice, when it finally broke, was a desperate plea. "I didn't know the market would crash so fast." The words were a confession, a self-justification, a surrender. The meeting was recorded. The audio later weaponized in a hostile takeover lawsuit. By the time Chen realized the trap, the boardroom had already decided her fate. Her equity, her reputation, her future, all erased in 90 seconds of silence. The CEO had not just fired her. He had rewritten the narrative, using the co-founder's own voice as the final nail in her coffin. But there was one detail that didn't make sense, and no one noticed it yet. The Fed's interest rate hikes in 2022 were sold as a noble fight against inflation, but the real target was something subtler: small business survival. A 2023 study by the Brookings Institution revealed that 62% of small businesses failed in the 12 months following the Fed's aggressive rate hikes, their loans choked off by higher borrowing costs. Meanwhile, Fortune 500 firms with deeper pockets and better credit ratings absorbed the shock, consolidating market share like predators circling a wounded prey. The Fed's mandate to promote maximum employment is legally vague, a loophole that lets them manipulate economic narratives without accountability. Consider the case of Midtown Bakery, a family-owned chain that operated for 40 years before its owner, Maria Lopez, was forced to shut down in 2023. Her loan application was rejected by a regional bank, which cited the Fed's tightened lending standards. But the bank's CEO, James Porter, later admitted in a deposition that the Fed's public statements had created a climate of fear among lenders, pushing them to deny loans to anyone who didn't meet aggressive criteria. The Fed's hands were invisible, but their influence was total. This isn't just about numbers, it's about power. The Fed's rate hikes weren't a neutral economic tool, they were a lever, pulled by unseen hands to reshape the playing field. Small businesses like Midtown Bakery didn't just fail, they were erased, their stories buried under the weight of corporate restructuring. The Fed's silence on this reality is its own form of strategic silence, leaving the public to fill the void with assumptions that serve the system's interests. And yet, the Fed's mandate remains unchallenged. The language of maximum employment is a smokescreen, a distraction from the real work, ensuring that power stays in the hands of those who already have it. The next question is, who benefits from this quiet war? And how long can it last before the silence becomes a scream? What started as a boardroom tactic was about to become a national crisis. The Fed's rate hikes weren't just choking small businesses, they were rewriting the rules of corporate survival. Consider Maria Lopez's Midtown Bakery, where the scent of cinnamon and vanilla had filled the air for 4 decades. In 2023, Lopez's loan application was rejected by First National Bank, which cited the Fed's tightened lending standards. But the bank's CEO, James Porter, later admitted in a deposition that the Fed's public statements had created a climate of fear among lenders, pushing them to deny loans to anyone who didn't meet aggressive criteria. The Fed's hands were invisible, but their influence was total. Small businesses like Midtown Bakery didn't just fail, they were erased, their stories buried under the weight of corporate restructuring. The Fed's silence on this reality is its own form of strategic silence, leaving the public to fill the void with assumptions that serve the system's interests. And yet, the Fed's mandate remains unchallenged. The language of maximum employment is a smokescreen, a distraction from the real work, ensuring that power stays in the hands of those who already have it. The next question is, who benefits from this quiet war? And how long can it last before the silence becomes a scream? But the most devastating revelation was still to come. The Fed's rate hikes weren't just about money, they were about control. A 2024 analysis by the Economic Policy Institute revealed that Fortune 500 firms gained $1.2 trillion in market value between 2022 and 2024, while small businesses lost 3.4 million jobs. The Fed's neutral policies had become a weapon, sharpened by decades of legal ambiguity. The boardroom is a battlefield. If you don't know the rules, you're already losing. Subscribe for more breakdowns of corporate power psychology. Tell us in the comments, what's the most ruthless power play you've witnessed at work?